Really quick video here for you. I am in the process of packing up a lot of my stuff. I'm hitting a new house here, so super excited. But I want to show you a way to trade and manage your trades. That's a brand new way that you might not think about. Instead of using R to target your trades or a profit target to target your trades, you can use something quite a bit different here. So let's dive into it very quickly, really quick. I want to show you guys this. I only have a few minutes, right? So first of all, obviously trade with Maven here. Check it out. Link in the description below. This is the best prop firm. Lots of new shit coming in. We've got a couple of really great payouts already. People have been trading super well. We've got 10 funded traders within just the first month of launching. This is something that you can use on a day trading strategy. If you're trading Bitcoin on the weekly, this does not apply to you. But this is something I've kind of realized is if we're using the logic of the larger bank style traders that have to go into the office, right? When are they leaving the office, right? When are they making their major decisions? They're making their major decisions on the open, the lunch times, the closes of the London and the New York, right? So if we use that as consideration as to when to exit our trades, because we don't actually know if the trade's going to continue in our favor after they've exited their trades. Let's give you a scenario first of all. It's the end of the day in London, which is right about here, right? We don't know if everyone in the London offices are going to close their trades, leave them open, or if the closes of those trades are going to cause the market to shift or continue in the other direction. So I would say there's about a 50% chance that somewhere around this time, it's either going to cause a spike to the downside or a spike to the upside, right? Because people are closing their trades. So we can see here, there's usually starting to calm down after some movement, calm down after the closes. There's a lot of shifting around that area, right? And the same sort of thing at the opens as well. But I'm just going to use that as an example. You can see right around here, market shifts right before the close, right? People are closing their trades before they leave. And it doesn't happen every day, right? But it's something to take into consideration. So this is an idea that I want to just throw into your head, is if we watch the times of the market, we can get a really good indication of when we want to be closing our trades. So let's go back to one of these back traders right here. Okay. So let's say we have a trade running to the bullish side here, right? We had entered, maybe somewhere in there, stops below there, and we had targeted 3R, right? That's a really common thing for traders to do. 3R trades, right? Maybe 5R, 2R, whatever. But even 2R didn't get hit, right? So that would have just let it run. And then you would have maybe closed it out later on, or, it could have come back and hit your stop, right? At a break even, right? See that hits a break even, something along those lines, right? Now, what we can do is we can say, hey, let's watch that area and let's look for possible reversals in that area. And I would say, a little bit before, a little bit after. And if there's a possible reversal coming around, that's when we can then exit the trade, lock in that trade for the day, and then get on moving with our day rather than being stressed out that it's going to hit the stop or it's going to go even deeper, or we're going to have to leave it through the swap for the day, right? So what I would do is I would say, okay, look at this. We have this range here. And then we can see, okay, once it closes back within that range, we can say, okay, now I want to get out of this trade. Let's exit on that close. And that's going to be a pretty optimal exit just for a 1R, right? You're not going to be able to snag these absolute perfect trades, which would be 1.7, which honestly isn't that much of a difference because you're never going to get the exact top. So even if you got that, it's 1.3 versus 1R, right? And in a best case scenario, you're going to get 1R if you're going to leave it here. Let's look at another day. We can look another here. So let's say in a scenario here, we actually don't see any rejection, right? Well, let's say we're in that long again and we see, okay, 3R. We don't see any sort of rejection around that time. Well, let it run to your 3R. That's perfectly fine. I'm not saying don't use R's as your targets or targets as your targets, price levels as your targets. But we could clearly see, okay, let's say that we were in a long from down here, right? Just an example, it doesn't matter. And you targeted, who cares, right? Again, who cares? Maybe say you're in a long from there, we're targeting about 3R again, right? Again, same thing. We see it coming back down. We see a reversal right in that area. And then we want to get out right around there, right? So that way we know that we're not going to hit our stops, okay? This is just an example for you guys. Play with it as you will. That's just an idea I wanted to throw into your head. All right, guys, thanks for watching. Like and subscribe and get funded with Maven. Get 200K, the easiest rules. And home of the $79 account. You only have to pay $79 to get funded. See you guys next time. Hunter FX.